Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ssr Mining Inc. Annual Report. Ssr Mining Inc. offers a diverse range of businesses and services that cater to the exploration and development of precious metal resource properties. The company's primary focus areas include the acquisition, exploration, and development of gold doré, copper, silver, lead, and zinc deposits in various countries. The company operates in 4 key regions: the United States, Turkey, Canada, and Argentina. Its portfolio includes several notable projects such as Ssr in Turkey, Marigold in Nevada, CB in Saskatchewan, and Puna in Argentina. These projects demonstrate the company's commitment to exploring and developing precious metal resources across different geographies. By providing a range of services including exploration, development, and acquisition, Ssr Mining Inc. has established itself as a significant player in the mining industry. Its expertise spans multiple commodities, making it a versatile partner for investors and stakeholders seeking to tap into the precious metals market. Der Aktienkurs von Ssr Mining Inc. SSRM hat sich in den letzten 12 Monaten über 15.324% erhöht, was auf eine Kombination aus strategischen Akquisitionen, positiven Projektentwicklungen, robusten Finanzergebnissen und einer aktiven Kapitalrenditestrategie zurückzuführen ist. Eines der wichtigsten Ereignis, die zu diesem Anstieg geführt haben, sind die Übernahme der CC in wie mein im März 2025 trug erheblich zur Produktionssteigerung und zum freien Cashflow des Unternehmens bei. Die steigenden Gold- und Silberpreis im Verlauf des Jahres 2025 wirkten sich positiv auf die Einnahmen von Ssr Mining und die Anlegerstimmung aus. Die Veröffentlichung des Anfänglichen 12 Jahres Minenplans für CC und wie im November 2025 habe einen Nettobarwert, NPV, von $824 Millionen hervor unsteckt des Vertrauen in die langfristige Wertschöpfung des Vermögenswerts. Der positiv technisch Bericht für das Hadmaden Projekt im Januar 2026 führt zu einer positiven Analystenstimmung und einem Anstieg der Aktienkurs. Die starken Ergebnisse für das Quartal 2025 im Februar 2026 übertreffen die Erwartungen der Analysten deutlich. Das Unternehmen meldet ein Ergebnis von $88 pro Aktie und einen Umsatz von $52.17 Millionen, was die Konsenschätzung von $56 übertraf. Die Operative Prognose für 2026 sah eine Steigerung der Gold-Equivalent Production 10% im Jahresvergleich vor. Die Genehmigung eines Aktienrückkaufprogramms von bis zu $300 Millionen durch den Verwaltungsrat signalisiert Vertrauen in die künftige Cashgenerierung und das Wachstumspotenzial des Unternehmens. Die Erhebung der Mineralreserven fast 40% im Jahresvergleich, hauptsächlich durch die Einbesichung der CC und wie und Hadmaden Projekt, stärkt das Vertrauen in die langfristige Wertschöpfung des Vermögenswerts. Diese Ereignis haben zusammengeführt, den Anstieg des Aktienkurses von Ssr Mining Inc. zu erklären. Ssr Mining Inc. maintains a market capitalization of $5 billion, broadly in line with the industry peer group. Ssr Mining Inc. trades at a higher price-to-earnings ratio of 26 times and a lower price-to-book ratio of 1.54 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The balance sheet appears very conservative, with liabilities representing only 24% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The net income and profit margins of the company underwent significant changes between 2023 and 2025. In 2023, the company experienced a decline in net income due to a temporary suspension of operations at CB, resulting in a loss of $16.9 million. This led to a profit margin of -6.9%. However, by 2024, the situation worsened with a net loss and a profit margin of -26.3% due to Ssr incident reclamation costs and impairment charges. The turning point came in 2025 when the company's net income increased by $656,031 from a loss to a profit. This significant improvement was accompanied by a substantial increase in revenue, with a total growth of $450.4 million. As a result, the profit margin improved significantly, reaching 24.2%. The main reason for this turnaround is attributed to the company's ability to recover from previous setbacks and adapt to changing circumstances. The company's financial performance is a notable aspect of its overall success. One key indicator of this is the generation of positive operating cash flow. The data reveals that the company has consistently produced positive operating cash flow over the past 3 years. In 2025, the company generated $471,853 million in operating cash flow, demonstrating a significant increase from previous years. This trend continues in 2024 and 2023, where the company reported $40,130 million and $421,725 million respectively. The consistency of this positive cash flow is further reinforced by multiple other pages within the report, including page 148, 160, 161, and 191. This consistent generation of positive operating cash flow suggests that the company's operations are financially stable and capable of producing a steady stream of revenue. The company's debt level has undergone significant changes over the past few years. Initially, there was a potential for increased debt due to funding requirements. However, by page 135, it is noted that there were no outstanding borrowings under the second amended credit agreement. By December 31, 2025, the debt level had increased significantly, with an outstanding balance of $570.3 million. The current portion of debt has also seen a substantial increase from $0 to $229,640. Furthermore, the total debt level has risen by $136,897 from 2024 to 2025. Additionally, page 216 notes that the debt level increased due to an increased credit facility. These changes indicate a significant increase in the company's debt level. On the other hand, interest expenses have shown mixed results. Initially, there was a 12% increase in interest expense from $13 million to $14.6 million by page 129. However, by page 147, it is noted that interest expense decreased from $16,616,000 in 2023 to $13,028,000 in 2024. By page 213, interest expense on lease liabilities also decreased from $4,645,000 in 2023 to $3,934,000 in 2024. However, by page 220, it is noted that related party loan interest expenses have increased. Overall, the company's debt level has seen significant increases, while interest expenses have shown mixed results with some decreases and one increase. Management's outlook on the company is cautious due to the Ssr incident, which has impacted business operations. Remediation efforts are underway, but this may divert cash from other mines, potentially impacting planned capital expenditures and development plans. However, management remains committed to a long-term view on corporate responsibility and sustainability, aiming to minimize environmental impact and leave a positive legacy in communities. The company intends to return excess attributable free cash flow to shareholders through share buybacks and dividends. Management also acknowledges the potential for future investments to be restricted due to the Ssr incident. Additionally, there is a risk of corrupt practices by employees or agents that could have a material adverse effect on business. Despite these challenges, management is confident in the company's ability to fund planned activities and commitments with its working capital and future cash flows. The application of investment incentive tax credits may also reduce income and mining tax expense and cash tax payments expected in the future. The company has made several strategic moves through acquisitions and divestitures to expand its operations. On the acquisition front, the company has invested in various projects such as Hod Maden, CC&V, C, Puna, Core, Mari, Seeb, and Carlton Tunnel permit modification. These investments have been valued at different amounts ranging from $16 million to $154 million. In addition to these individual project acquisitions, the company also acquired Cripple Creek and Victor Gold Mine, CC&V, from Newmont Corporation for a total consideration of up to $275 million. This acquisition is expected to bring significant benefits to the company's operations. On the divestiture side, the company has sold off several assets including AI, Go, So, Gold, and Silver. The sale of these assets has generated revenue of up to $102 million for the company. These transactions demonstrate the company's ability to adapt to changing market conditions and optimize its portfolio. Overall, the acquisitions and divestitures made by the company reflect its commitment to growth and strategic expansion. By investing in new projects and selling off non-core assets, the company is positioning itself for long-term success. The company's financial activities have been quite active in recent times. One notable aspect is its dividend payment history. According to the records, the company has indeed paid dividends, indicating a commitment to sharing profits with its shareholders. In addition to paying dividends, the company has also engaged in share buybacks. This strategic move demonstrates a focus on returning value to its investors and potentially boosting their returns. By buying back shares, the company is essentially reducing the number of outstanding shares, which can lead to an increase in earnings per share for existing shareholders. Concerns about inventory buildup or supply chain disruption are evident in various sections of the report. On page 93, it is noted that there is an inventory buildup due to a leach pad inventory of 360 cars, indicating potential issues with managing excess stock. Furthermore, the Ssr incident on the same page suggests a significant event affecting supply chain disruptions. The write-down of inventory in 2025 and 2024 also raises concerns about inventory management. The substantial decrease in reclamation and remediation costs in 2025 may indicate underlying problems with inventory buildup or supply chain disruptions that were not addressed in the previous year. Additionally, page 210 highlights increased total current and non-current inventories, further emphasizing the issue of inventory buildup. The repeated mention of the Ssr incident across multiple sections underscores its significant impact on both inventory management and supply chain disruptions. Overall, these findings suggest that there are legitimate concerns about inventory buildup or supply chain disruption in the report. That concludes the financial summary for Ssr Mining Inc. Feel free to comment below, and I will be happy to answer them when possible.